But I want to talk about the third point you put there, historical trends on mortgage rates and refi booms. Can we, in actuality, I think is what you're saying, in good faith, encourage buyers to buy now and then refi in the future? I would not encourage anyone to buy something now that they can't afford on the basis of refinancing.
Zach, what do I do when a video goes viral? How do I milk that for all it's worth?
We're live. So, hey, everybody, welcome back to our bi-monthly conversation with David Childers from Keep on Current Matters, where he presents the economic data and a whole bunch of other awesome facts about what's happening around the country with the housing market, with the economy, with mortgages, with new construction. And today we're going to be talking about a couple things, obviously, talking about the crash, because that's the big buzz that is circulating around everywhere. And we're going to be talking about cancellations and, new construction and contracts and things like that. So we got some good stuff in store for the next 30 minutes. David, welcome to another episode.
Thanks, Johnny. Excited to be here. We'll talk about all of that, this fever pitch in the market of what's going to happen. Is the real estate market going to crash? We've talked about this. It feels like for the last couple of years, but they're different. Certainly a different tone in the market with some of the cancellations that have come out and, existing home sales coming out on Wednesday morning, down to 5.1 million annualized home sales in this country. So a lot of people wondering what's going to happen here. So we're going to talk about that. We're going to talk about, a few different looks at answering the question, is the real estate market going to crash? So excited to do that, Johnny. And I would say even on Facebook or here on Zoom, what are the topics that folks want to talk about? I've got slides up here and I've got different things, but if there's something you want to talk about and I have some information on it, we can talk about that too. So I don't know if there's anything, Johnny, you've heard that agents are struggling with, or that, buyers or sellers are struggling with right
now. Yeah, man. So I'm interested in the cancellation thing myself right now. Some of the things, I know a lot of people are worried about what the market's going to do and such like that. And right now, to me, it's an average market. I wouldn't be worrying. It's normal, right? So a lot of people are worried, and I think they're buying into the news, and some of the news is fear mongering of what's happening. And you always bring a perspective to have an educated opinion of what's happening.
Sure.
I think the biggest fear for a lot of people is what's going to happen. And nobody has a crystal ball, but what we can do is look at what the trends are, and the trends leave clues, right? We can look at the historical data, and the historical data often almost repeats itself, or it can be contradictory to what is being told out there. Like if they tell you, oh my God, we had a 3.7% reduction in closings last month, the market's going down. But then we look at last year and we also had a 3.2, and the year before that, a 3.6. It no longer seems like, oh, the doom and gloom's there. It is always happening, right? So I'm interested, David, really in cancellations, because, new construction shot up like a rocket ship over the past couple of years. So what are we seeing on that front?
Yeah. So that was the big news that came out. June cancellations on new home contracts. I've got a graphic on there to show you. So let me just pull that up. Let me share this real quick, and we'll talk about that, because I'm going to make a couple of thoughts and what this would signify. So this is builder cancellations. National rate shot up in June. 14.5% of contracts on new construction are canceled. Now, I want to sort of position this way. No doubt, jump up. We can see that in the graphic there. Here's the interesting thing. When this right here, this bar is April of 2020. So I'm going to call that COVID. 16.5% of the contracts in this country canceled. We just saw 14.5%. So not quite there, but let's face it, Johnny, not too far away, right? It's not going to
sure.
Here's what that signifies to me. There's an incredible amount of fear in the market that consumers have. There's really a couple of reasons that contracts are being canceled on new homes. One is, hey, we qualified for this amount last year or earlier in the year, and now we can't afford it. So that's certainly a reason that would happen. The other one is gosh, I don't know what's going to happen. This home may seem like it's overvalued to me. Homes are going to lose value. I'm hearing in the world and on media that the market's going to crash, and I'm not going to do anything. We're going to kind of stay where we're at, and I think that's our job right now, is to understand what's in the market, the fear that's in the market. I've always said, anytime there's change that leads to fear then left unchecked turns into uncertainty. And what do we say, Johnny? In uncertain times, people follow the certain, having the data, having the information. And when you're uncertain, that leads to paralysis, right? I'm not going to do anything. And I think you're seeing that right here. I'm not going to move forward with this contract. And certainly that is the case. So my message would be not that some of these people didn't need to cancel their contracts. They probably did. The message is we need to be out with our message in the market. If you're sitting around talking with other agents about what's going to happen here in the market, or worrying about interest rates, or worrying about what's going on, then I think you need to get out and you need to be educated. You need to bring the information to those that you share. And there's a book that was written a while back. Donald Miller wrote it, Building a Story Brand.
That's a great book.
Oh, phenomenal book. If you haven't read it, you're looking for some summertime reading maybe here as we go through another month or so of summer. People do not follow the best leaders. They follow the ones they can understand the easiest, right? So can people understand you? Are you putting that information out there? That's what I would say. And I want to give you a little perspective on this, because certainly anybody that's on this or watching this, if somebody needs to cancel a contract, we're going to help them do that. But I think the question we need to be asking right now is, why would you want to wait? Why wait? If you're waiting, saying, I think this market's going to crash, I think things are going to go down in a bad way. Well, then what are folks saying out there? Okay, let's look at the first one. I want to talk about interest rates. I think mortgage rates, from Rick Shargett, Adam Data, I think mortgage rates will stay relatively steady over the next month, with rates on a 30-year mortgage ranging between 5.75 and 6%, and rates around the 15-year mortgage hovering around 5%. Okay, so if you think rates are going to go up or down, this is an expert perspective from Adam Data. We saw inflation come out white hot. We know the Fed is going to act again, and consensus is about 75 basis point raise in the Fed funds rate. Last time they did that about a month ago, the middle of June. That then sort of caused the mortgage market to go into a little bit of a frenzy, because what the message essentially is inflation is not under control. So what is the mortgage market looking for right now? Some sort of sign that inflation's under control. Okay. Mm-hmm. I don't think it's going away tomorrow. I don't know that even a 75 point raise in the Fed funds rate that the mortgage market's going to go, that's going to do it. I don't think you're seeing signs of that, but that's what we need to be looking for. What are the signs that show inflation's under control? Does that come in what time frame? That's the big question. So we can talk about that, Johnny, here in a second. But again, what are the price forecasts? Again, we used this last time on the home price expectation survey. Prices are forecasted to appreciate. Now, I know we're seeing a lot of price reductions and price changes right now in the market. And the pricing strategy over the last couple of years is, what do you think we can get for the house, then add 50,000 to it? That's essentially been in a lot of markets how homes have been priced. And now we're seeing people have to come into more realistic value pricing on the asking price of a home. But that does not mean that the net effect of this year's price will decrease. And many people send us messages here at Keeping Current Matters. Why are you saying that homes are forecasted to appreciate? Because they will this year is why. We are seeing price reductions. And certainly if you buy a home and you have to sell it and you're over leveraged, you could lose money in that situation. But nationally, there is not a case to be made for prices to fall. So again, we'll go back to the question, why wait? Are you thinking interest rates are going to fall? Are you thinking prices are going to fall? You could even take this conversation into rents. The median rent in the top 50 metros reached $1,849, 15.5% higher than this time last year. It's a new record rent for the 15th month in a row. Rents are skyrocketing. They're impacted by inflation.
Sure.
So we look at interest rates, we look at prices, we look at rents. Now, if somebody needs to do that, we're going to help them do it. But there's not a case to be made that rent prices are going down. You know, if you look at that kind of across the country, 15.5% being the consensus, but a little bit higher in studio apartments, 1 bedroom, 2 bedroom. I don't think anybody buying a house is trying to say, you know, complimentary to a studio apartment. And the fact is too, even though homes have become less affordable, the average monthly mortgage payment is still cheaper than a 2-bedroom apartment in this country on average. Now, I know there's some markets, I'm going to take these slides down for a second. Some markets where that's not the case, but really we're seeing those cancellations, we're seeing price reductions, no doubt, but that does not mean that we're in a market that's going to ultimately, you know, lose value this year. I think there's some aspirational pricing in the market that's having to correct itself and get right.
Sure, I agree with that. I mean, there's a couple of things, and we got a great question in there we can tackle in a minute. We're going to have to unbox it. But we're seeing builders offer incentives right now and offer not just incentives to the buyer, but also to the agent, and increasing their commissions back from trying to rob their pockets. Now they're trying to line their pockets, if you know what I mean. We can't talk specifically about commissions too much, but they're going from 1 apple to 3 apples, right? Or no apples to 3 apples. But there's something that we have going on right now, a couple of things. And I don't want it to become political. Man, I would love to have that discussion. It's just not the time and the place for it. But the consumer confidence is down from where it was. Consumer confidence last month, well, in June and May was 103.7%. It's 98.7% now. So consumer confidence has dropped based upon gas prices, based upon, you know, supply chain issues, based upon traditional just inflationary things, right? It's costing more now to go to the store. It's costing more now to heat your home. Even in New Hampshire, they just gave the electric company approval for a 50% increase for, I think, delivery or whatever it was, but a 50% increase. And there's delivery and then whatever the other one is called, right? So 50% increase. So your bill's going to go for, and it's already high, right? My electric bill is going to go from $300 a month to $450 as a result of this. So it's like, great, thank you. May I have another? So all these things are coming to impact, maybe doing us a favor in some respect, where if you're approved for 400,000 and that's stretching it, because that's what the mortgage guys love to do, is tell you what you can afford. Where, you know, if they always tell you 400, I always say buy 350, right? Give yourself a little buffer there. It's going to keep you honest in your pricing, right? So maybe scale back a little bit, and the prices will come as you see more houses come to the market, as you see more time on the market, as you see people negotiate, and negotiations are happening. It doesn't necessarily mean we're going to crash, but we are in a midterm year, right? Midterm elections. So with consumer confidence, with the other things that are going on politically and geopolitically, I think the next 5 months will be bumpy, depending on what happens at that midterm. I think is going to be the precipice. Are we going to go off the cliff, or are we going to pull back and we're going to be able to regroup from there?
Sure.
But as far as confidence goes, things are still moving in my area, right? So I think there's going to be some regional play to that. I don't know the word that I was looking for, so I'm going to use regional play, but some regional influence on that. My area, we're just not seeing it, right? We're just not seeing it.
Yeah. You bring up really good points. I was looking in the chat here. There's a question Daniel put in there, 3 questions. I don't know that we'll be able to go in depth on all these, Daniel. Monetary policy, certainly don't have the time, nor do I have all the answers, let's be honest on that. But, you know, the conversation there is certainly with the amount of money that's been infused in the economy, how's that going to affect GDP and national debt, or, you know, the outlook and question, I'd say it's outside of our control. Obviously, this is a span of control point for us in real estate. You know, we're likely looking at the 2 consecutive quarters of negative GDP, common held definition of recession. It is a slightly different recession when you look at the National Bureau of Economic Research that defines recessions, but let's go with that for now. Your insights and perception on lender layoffs. At the end of the day, lenders have to build the capacity for refinances, which is what they've done, and they've gone away. Okay. And certainly they're seeing less purchase business than what they've seen in the first quarter of this year, the first 4 months of this year. So I don't see that as instability. Like we saw back in 08, could there be companies that are in, unstable? We've seen a couple go out of business. Sprout Mortgage was one of those that went out of business, but I don't think you're seeing, and I'm going to show you something in a second that'll point to that. What they ultimately have to say is, are we lending money to people that can repay it? If you remember post 2008, Dodd-Frank was the qualified mortgage, which the essence of the qualified mortgage was the ability to repay. And I always make a joke about that because that sounds like a good idea, right? If we're going to give somebody a loan, they need to have the ability to repay. Yeah, I see maybe another one out of Dallas. I don't think there's widespread ones, is my point, Daniel. If you remember, if you were in the business back in 2008, there was a website called the Implodometer, where every day, banks were posted on there. We're not looking at a situation like that. But I want to talk about the third point you put there, historical trends on mortgage rates and refi booms. Can we, in actuality, I think is what you're saying, in good faith, encourage buyers to buy now and then refi in the future? I would not encourage anyone to buy something now that they can't afford on the basis of refinancing it. And I think the essence of that is very problematic, and I hope people aren't doing it. I do think that buying for anyone in this market or a market like it at any time is going to be a personal decision. So here's what I can give you in that, Daniel. I can give you what experts are saying for appreciation. You can agree or disagree with those. I can give you what experts are saying on mortgage rates. You can agree or disagree on those. And then you have to look at the personal situation who you're working with. If somebody's saying, hey, we're going to buy this house, this is our forever home, we think we're going to be here in 10 years, you can look at it and go, what do you think? Is it a good time to buy? If you wanted my personal opinion, I absolutely think that. And here's why I think that. If you could go back in time and buy a home 10 years ago, would you do it? I mean, most of us, Johnny, would be like, yeah, how many could I buy? What's my limit?
Right.
And what makes you think 10 years from now that would be any different? But Daniel, I think it's an absolute personal decision that we need to bring our expertise to and say, Mr. and Mrs. Buyer, what are your plans? And let's help you build the best plan for you. If you're coming into a town and you're saying, hey, we want to buy, but we think we're going to sell in 6 months or 12 months, I don't know if I'm doing that. It's all about what are your goals, what are your time frames, and helping somebody make a good decision. But I think you can, in good faith, in the right scenario, which I think most people aren't trying to buy a house and sell it 6 months later.
Sure.
I think you can absolutely say that.
I don't think, listen, I mean, here's the deal. If somebody wants to buy a house, if somebody comes to me and says, is it a good time to buy? To me, it's as good time as any, right? Because what are your needs? I live in an affluent town. The people here they buy big houses, right? Because that's what we sell in this town. Yeah. They are doctors, lawyers, right? But we also have Fidelity 3 miles down the road, big campus in New Hampshire, right? So a lot of them work at Fidelity, Anheuser-Busch, right? High level management positions. They're making educated decisions. They need a place to live for their family. So you can rent, you can stay in the small home, or you can get into Bedford. If rates go up, then you're protected. If rates go down, you refinance. I don't think, and maybe prices are going to go down a little bit. I don't think they're going to crash like they did because those factors don't exist, right? Yeah. So, everybody's saying marry, whatever they say, date the rate, marry the house or whatever like that. Listen, it is what it is. We don't know what's going to happen. So you buy the house based upon your personal need. And here's something interesting. I was doing some research for a speaking engagement that I have coming up. And now these are median numbers. So of course, when we're talking about millennials, this number is going to be lower. But when you get to Gen X and above, this number is going to increase. But 15% on average of homes were purchased were multi-generational, right? Kid, for two reasons. One was the health of the parent, yep, right, of the parents, and the other was kids coming back. So, there's a niche that people can tap into. Will we see that increase or decrease, right? who knows? Maybe if prices get out of control or rates get out of control, you will see more of that. This is all from the generational trends report. Y'all should have it, right? It's free.
Yeah,
It's
we
from
talked about that
NAI.
last week. That thing's killer. Yeah, it's
Yeah,
our
and
generational trends report.
that's where I get all my information. So if I'm wrong, I can say right there, that's where it is. But
Right.
15% were multi-generational purchases. So, I mean, that's also a conversation to be having with people. Get educated in these things, but by no means would I be talking anybody out of buying a home. That's not our job. Our job is not economic advisors. Our job is real estate advisors. And that real estate advisor, our fiduciary, is to ensure that we follow the law. Our job has never been, our fiduciary isn't to get them a good deal. Our fiduciary isn't to predict the future. Our job is to protect their interests in buying. Could that market go up? Could the market go down? Your best line of defense is to say, this is what the experts are saying.
Yeah.
That's it. Not for you to try to interpret it because you're not an expert.
Yeah.
That defer the liability, man.
And I think a lot of this data, the thing you always say, Johnny, about keeping current matters is, hey, nobody knows who keeping current matters is, first of all, that you're working with, but this is information that you're pulling and presenting, right? Okay, if you think the market's going to crash, let's talk about that for a minute. Let's look at the information. Let's talk about your scenario. And let's acknowledge that we're going to take it from a very logical conversation about what I'm about to show you to an emotion. That's an emotional conversation for a buyer. Nobody wants to do that. And especially since 2008, everybody saw the carnage of that. And you don't want to do it. But let me give you a couple of things to think about in that, because this is the fever pitch of our market right now. Is the real estate market going to crash? Okay, so Johnny, it feels like we've talked about it ad nauseum. I'm going to give you a couple of different looks real quick. One reason the market is not going to crash, there are not enough homes for sale. If you think about this right here, 3 months on average, and that's been a shoot up over the last year. So far the first half of this year, the average or where we're at right now. You go back in time, those red bars are the housing crisis, 06 through kind of 2011, significant amount, 6, 8 months, 10 months at the height of active inventory in this country. I don't see inventory getting that high. There's just not a case to be made for it. And you could go, well, David, I disagree with you. I'd have to ask you, where's the inventory going to come from? Mm-hmm. It's just not there. Builders are trying to build. We'll see more inventory come to the market. I'm not saying that, but we're not going to see a scenario where we have a ton of inventory on the market. Now, remember, as inventory starts to climb, we've been in a deficit over the last 24 months. What forecasters can't say right now is what's going to be the added impact of extra inventory in the market coming out of a market where there wasn't any, right? There are a lot of people like, we can't even do anything. Now you maybe can. I personally think, if we look at the 30-year fix in the 5s right now, we get a little bit of relief at some point on inflation. We go into the 4s just psychologically. If we were going to the 4s on a 30-year fix, I think you're going to see a lot of people take advantage of that extra inventory in the market. I don't think we'll see a frenzy like what we've seen, but it's just not there. One of the questions that was asked earlier, Daniel, you asked this about the stability of banks. Well, the stability in 2008 of banks, and you have the TARP program, the bailouts, all of that, was because they had lent money on loans with the people that couldn't afford them. They had to take those loans back. They had a distressed asset. It just about sunk the financial system in the U.S. Well, this is a look at lending standards. From the Mortgage Credit Availability Index, it's updated every month. The higher it is, the more loose lending standards are, and you can see where standards were back during the bubble and where they are today. What actually happened during the pandemic is lending standards tightened, right? Nobody wants to lend money to somebody who's not going to have a job. And that was the fear, and that happened to a lot of people during the pandemic. Remember back in the pandemic, Johnny, it was towards the beginning of it, maybe middle of the year. I can't remember when jumbos went away. Yeah. It was really, really hard to find a jumbo loan for a little while on the front end of the pandemic. Why? Because people were like, we definitely don't want to lend, $300,000, much less $1 million to somebody if everybody's going to shut their businesses down. Right?
Absolutely.
So, go ahead.
No, absolutely that. And what also doesn't exist throughout these tightening of the standards. Now, they does exist, but they're qualifying right? So if your 80-20 stated loan, your 80-20 stated income loan, I took out 3 of them. You know what I mean? I couldn't get one today. You have to be able to validate your assets. If I say I make $250,000 a year and I got 10 grand in the bank, something's awry, right? Something's amiss.
Totally.
So if your rent's $2,000 a month and you're stating you make $250,000 a year, you're going to have assets somewhere. So those non-conforming type loans don't exist. Those non-conforming loans were like 90% of the problem, right? And when you unpackaged the crash, they took all these C loans and packaged them as A, right? A credit loans and all these other things. They weren't A loans. So when people started to default, it was traditionally those that dragged the market down, right? Because if 20% of your package was bad loans and it was $1 trillion package, I don't know what the math on that is, but it's a lot. And you can't sustain that. So the issues that caused the crash in 06, 07, 08, that area, they don't exist. And this is proof of that.
Yeah.
It's proof positive.
Let me show you further proof of this in real terms, Johnny. And it's foreclosure activity. Now, there's probably somebody watching this saying, well, David, you can't look at past foreclosure activity and say people aren't going to get foreclosed on. And I would agree with you. But if you go back to this slide, and I'm like, hey, lending standards have changed. We can see it in the data. We know that lenders are qualifying people now. Here it is in the proof. When you have a better qualified borrower, that leads to less defaults. So let's kind of take off the map 2020 and 21. What's the trend in this country from 2011 to 2019? The trend there is we've had less foreclosures. Why is that? Because we haven't been lending money to people that can't borrow it and repay the loan. If anything, Johnny, this could be a controversial statement. I would say the conversation in the coming years is how do we free up more credit? How do we allow more people to buy a home? That wouldn't surprise me at all because we've driven foreclosure and default rates so low. Okay. And we know 2020 and 2021 are low years because of the moratorium on foreclosures. But what also happened, prices shot up, equity shot up. You've got choices. If you're in trouble now, you can sell that home, put a little bit of money in your pocket and, get through the crisis you and your family are facing. But absolutely the trend over almost the last 10 years has been the falling rate of default in this country. And, if you even look at like the first half, this is a look at foreclosure activity by year, but with the first half of the year. So January through June, every year going back to 2008, there were almost 165,000 foreclosures in the first half of this year, roughly on par with 2020, behind 2019. Okay, so we are seeing more distressed properties come into the market, but nowhere near what we saw back. And I can bring all the updated forbearance information if you want that, but I can tell you it hasn't changed dramatically. The large majority of people that went through forbearance came out of it, either worked it out with their bank or paid off the loan in some form or fashion. But if you have a situation where you don't have the inventory, you don't have it coming from foreclosures, you're not going to get it from, you'll get some from builders, but you're not going to get it from builders. Where is it going to come from? Rick Sharga from Adam said this: foreclosure activity across the U.S. continue to slow, steady climb back to pre-pandemic levels in the first half of 2022. While overall foreclosure activity is still running significantly below historic standards, the dramatic increase in starts suggests that we may be back to normal levels sometime in early 2023. So I can give you all
back to normal.
Folks that want to normal, and that's normal. And I would say normal is not high. And so there's not a case to be made when you look at the data for a market crash. Are prices normalizing? Is it more expensive to buy a home? It absolutely is. Has the frenzy in the market been squelched? Absolutely. Are homes not appreciating at the rate they were? Absolutely. And that's a good thing. This is a good thing. Let's not forget that. What are the two things that we prayed for last year, Johnny? Wouldn't have as much appreciation, and could we get some more inventory in the market? Guess what we got?
And here we are. And I might have said this on our last meeting. I don't recall. I watched my old broker who trained me in the business. Great guy. He listed a home a couple towns away from me, kind of rural area, right? Sold for, and he's very aggressive in his pricing. Sold for $50,000 over asking. And there was 50 couples, or 50 people signed in to the open house.
Yeah.
We're not going to see that crash in New Hampshire, right? Not anytime soon, right? Not anytime soon. So again, I think some of it might be
One of
regionally.
the things that was buried in the existing home sales report, you know, was down for the 5th straight month. That's the headline everybody's running with. But I think the days on market were for the month of June, 16 days.
Yeah.
Unbelievable. So
Gotta run to the hills, David. Run to the hills. It's not 16 hours, it's 16 days.
Listen, Johnny, if it's priced right in this market, and I think everybody on this call, if you would disagree, so is it priced right in this market? It's going to sell.
I think a house priced right in any market will sell.
Yeah, that's
right.
That's a fair statement. Yeah, it does take a while for sellers to adjust their expectation.
Yeah, and I do notice every year that there was either a main, whatever the main election is, presidential election or midterms, it always got a little funky because people were preoccupied with this, that, the other thing. And, you know, one side sells doom and the other side sells gloom, right? So there's no winning with that. A lot of people will get preoccupied with that, but consumer confidence is down a little bit, but it's still relatively high. I think people are waiting a little bit on pins and needles to see what happens, what repairs are coming for inflation and things. And I don't think your answer for that is going to come anytime soon. I think we're going to have to get through the elections in order to see what that relief is going to look like, right? Maybe we won't see that relief. Sure not pushing everybody to electric cars. It's sure not paying, you know, $5 a gallon at the tank. That doesn't help anybody. But as far as housing goes, here's the deal, man. We have 370 million people in this country. They need places to live.
Yeah.
That's not going away. We don't have enough houses as it is, affordable housing for people to live. And if it's not people, it's corporations. So adjust your marketing, right? Get in with these corporate buyers. Get in with these sellers. You know who isn't affected by, and I might have said this before too, you know who's not affected by this? Doctors, surgeons, right? Those people aren't affected. They're still going to make great money. They're still going to be hired. They're still going to relocate. Military, same thing. Military doesn't sleep. It keeps moving, right? So you might just have to align your business model a little bit. Maybe the luxury market. I'm still talking to people in the luxury market saying things are still moving great, right? Even over in Chicago, things are still moving. Michael LaFido, I'm watching his posts all the time. Right? He's selling the highest list price in Wheaton, right? It's like, wow, you know what I mean? So, and you know, one of the biggest, when you look at how money walks or whatever that website is, the IRS tax migration, one of the largest counties for leaving and relocating their money elsewhere is Cook County, Illinois, right in the heart of where he is. So a lot of money is leaving, but there's still a lot of money there because they're buying these homes, right? So no matter where you are, people still need a place to live. You might just have to adjust your marketing, adjust your philosophy just a little bit. Maybe even lower, I don't want to say lower your standards and have it sound, if you'll only sell $500,000 homes, you might have to lower it to 400,000, right? Still going to be a good payday.
That's right. That's right. Johnny, it's always a pleasure to do these with you. I appreciate it.
Yeah, man. And the perspective that you bring is validating for sure. It's like a lot of people are running around doom and gloom and all the markets crashing. And that's a lot of the news that we say. I see you all over TikTok talking about, no, these are the factors why we don't think it is. Tristan's doing the same thing. I'm a proponent and advocate of it too. I just don't think the market, the factors just aren't there like they once existed, short of a complete meltdown of the stock market or the banking and stuff like that. And in my conspiracy world, that's possible.
And that's like the first question that had been asked. If, you know, everything goes to hell in a handbasket, for lack of a better word, then yeah, you got bigger issues than what we got going on. So,
but here's something too to understand, David.
Now, I don't see that happening. Let me be clear, but
you know, there's even though Bitcoin is down, last I checked, 20 something thousand, 23,000, whatever, from, at one point peaked at 69,000. I remember one time it was $700, right? So, but you can buy a mortgage with your Bitcoin now, right? You can, through Milo Mortgage. So there's all sorts of, here's the traditional world. There's all sorts of evolution happening, I think, which will hedge against some of these negative things that can happen in traditional markets. What's that percent going to be? Maybe it's 1%, if not under, but there is still an emerging world of new technology, of new funding and everything else like that. And again, when we take a look at the conforming versus the non-conforming loans, they're not giving out non-conforming loans.
Yeah. One thing I'd add to that too, Johnny, is this was proven out in COVID. The adaptability and the resiliency of the American entrepreneur, which is everybody on this call, right? We're going to figure it out. We're going to show up and we're going to figure it out. Yeah. So you can look at any forecast that even Keeping Current Matters brings, right? What that doesn't take into consideration is the adaptability, the ingenuity of the American entrepreneur.
You know what that means, David? You know what I hear as a real estate agent? It means you might only be able to have 2 martinis at lunch and not 4.
We can end on that, Johnny.
Anyways, David, people can get Keeping Current Matters. They can do all sorts of stuff with this data. They can make videos with it. You're making them. Tristan's making them. Yep. I make them periodically, right? You can use your local data to, emulate and be inspired by what you guys are doing. But if somebody wants to try Keeping Current Matters for free and get the data and be involved in that ecosystem of, the national economics of our industry, you can go to trykcm.com and get it 14 days for free. Yep. And, if you do, cool. If you don't, that's on you, right? But you got to have, the answers to the tough questions that the consumers are going to ask you. And when you go in there and you have your opinion, and that's the thing, I don't offer my opinion. I will never offer my opinion. I will offer the data and let them come to their own conclusion. Yeah. Right. And you can get that data at trykcm.com for 14 days for free. And then after that, it's less than $1 a day, man. Less than $1 a day. So anyways, David, if somebody wants these slides, how do they get them?
Email me, David at Keeping Current Matters. Be happy to send them to you if we can help you with those. All right.
Sounds good. David at keepingcurrentmatters.com. If you want the slides, trykcm.com. On behalf of LabCoatAgents, thank you, David. Thank you, everybody, for being here. Peace out. Sell some houses.
Bye.